Best scalping trading strategy for beginners. How to scalp forex, stocks, and crypto. Introduction. Welcome to our guide on the 10 best scalping trading strategies for beginners. Scalping is a fast-paced trading style designed to capitalize on small price movements. Whether you're trading forex, stocks, or crypto, mastering these strategies can help you stay ahead of the game. Stick around to discover proven techniques, step-by-step guidance, and practical tips. 1. Moving average crossover strategy. The moving average crossover strategy involves using two moving averages, a shorter one, like the 9 period, and a longer one, like the 21 period. When the shorter moving average crosses above the longer one, it signals a potential buy. When it crosses below, it indicates a sell. This strategy helps identify emerging trends early, allowing scalpers to capitalize on momentum. It works well in trending markets, but should be avoided during sideways movements. Adding volume analysis as a confirmation tool can significantly improve the strategy's reliability. Second, RSI scalping. The Relative Strength Index, RSI, is a powerful tool for identifying overbought and oversold conditions. In scalping, traders look for buy signals when the RSI drops below 30, indicating an oversold market, and sell signals when it rises above 70, showing an overbought condition. Pairing RSI with price action or candlestick patterns, like pin bars or engulfing patterns, can enhance accuracy. This strategy is highly effective in volatile markets, as the frequent price swings provide ample opportunities for short trades. Remember to avoid trading against the prevailing trend for better results. Third, Bollinger Bands breakout. Bollinger Bands are an excellent indicator for scalping volatile markets. These bands consist of an upper, middle, and lower band that encapsulates most price action. When the price touches or breaks through the lower band, it often signals a buying opportunity. When it hits the upper band, a selling opportunity arises. Scalpers use this strategy to trade breakouts and capitalize on rapid movements. Adding a momentum oscillator like the MACD can further confirm the breakout strength, ensuring you're not caught in a false move. Timing is crucial to make the most of this strategy. Support and resistance levels. Support and resistance levels are essential for scalping, as they indicate key areas where price may reverse or stall. Scalpers buy when the price approaches a support level and sell near resistance. This strategy works well when combined with confirmation signals, such as candlestick patterns or volume spikes. These levels act as psychological barriers where traders tend to make decisions, making them highly reliable. Adjusting your stop loss slightly below support or above resistance can minimize risks and maximize gains in volatile conditions. 5. Stochastic oscillator strategy. The stochastic oscillator is a favorite tool among scalpers due to its ability to pinpoint overbought and oversold zones. A buy signal is generated when the stochastic crosses below 20, and a sell signal when it crosses above 80. Scalpers often pair this strategy with trend lines or moving averages to confirm the direction of the trade. This approach is particularly effective during sideways markets when prices oscillate between defined ranges. Staying disciplined with entry and exit points is crucial to avoid overtrading. 6. 1-minute scalping strategy. The 1-minute scalping strategy is perfect for traders who thrive on rapid market movements. It involves analyzing a 1-minute chart and making quick trades based on indicators like moving averages, ARSI, and MACD. This method requires precision and focus, as trades are typically opened and closed within a few minutes. Scalpers using this strategy should have a clear risk management plan in place, such as tight stop-loss orders. This approach is ideal for experienced traders who can handle high-pressure trading environments. 7. Trendline breakouts. Trend lines are a simple yet effective tool for scalping. By drawing a line connecting lower highs in a downtrend or higher lows in an uptrend, traders can identify breakout points. When the price breaks above a descending trend line, it signals a bullish move. A break below an ascending trend line indicates bearish momentum. Scalpers enter trades at these breakouts and set tight stop-loss orders to manage risk. Adding volume analysis can help confirm the breakout's validity, increasing the strategy's reliability. 8. Fibonacci retracement strategy. Fibonacci retracements are invaluable for scalping pullbacks in trending markets. Traders use this tool to find potential entry points at key retracement levels, 38.2%, 50%, and 61.8%. When the price retraces to these levels and shows signs of reversal, scalpers can enter trades in the direction of the main trend. Pairing Fibonacci levels with candlestick patterns like hammers or engulfing bars adds further confirmation. This strategy works best in trending markets, where retracements offer frequent scalping opportunities. 9. Volume-based scalping. Volume analysis plays a crucial role in scalping, as it indicates the strength of market moves. Scalpers monitor volume spikes to identify moments of heightened market activity. A sudden surge in volume often precedes a significant price move, providing an opportunity for quick trades. Combining volume spikes with technical indicators like Bollinger Bands or RSI can improve accuracy. This strategy is particularly effective during news releases or market openings when liquidity is high. 10. News-based scalping. News-based scalping takes advantage of market volatility following major economic announcements. Traders prepare by monitoring economic calendars and trading the price spikes triggered by unexpected news. This strategy requires quick decision-making and precise execution, as price movements can be rapid and unpredictable. Scalpers often use tight stop-loss orders to limit risk during these events. Staying informed and practicing this strategy in a demo account first can help reduce errors and improve execution speed. Conclusion: scalping can be an exciting and rewarding trading style when approached with discipline and the right strategies. These 10 methods offer diverse approaches for beginners to navigate forex, stocks, and crypto markets. Remember, the key to success is consistent practice, risk management, and a willingness to adapt. If you found this video helpful, like, share, and subscribe for more trading insights.